all. You sold, okay? You sold Verizon, but it's actually a bullish move, you suggest, because it's a defensive name, and you're about as bullish as I can remember you ever being.
I'm as bullish as I can remember me ever being, Scott. I'm sure some snarky person's going to say, okay, that's a contrary indicator, but let's just think about this. Let's dissect the correction question for a second. You've already had corrections in multiple sectors, right? Large cap tech, whether it's Apple, whether it's Qualcomm, Amazon, they've been off more than 10% from their recent highs. They're coming back now. You can look at the financials. A lot of those, Citigroup, Goldman Sachs, they went down 10%. They're climbing back now. Energy names, look at Chevron Texaco, look at Marathon Petroleum. Those names went down 10% and now they're climbing back. The point being is we've had the correction. What happened was the sectors were out of sync with each other when they were correcting, so it didn't show up in the overall market. But we've had it, and I'm not worried about it. You've got a supportive Fed. You've got fiscal stimulus that's in the pipeline and coming. Yes, I'm worried about taxes, but it's many, many months before we're going to know what the tax regime is actually going to be. So in that context of being bullish, I sold Verizon. Take a look at a 5-year chart. The stock's up like 12, 15%. I know that if I ever get cautious, I can go back to Verizon and get the dividend. But I want to be in Viacom, which I started buying the first week after the Archegos meltdown, and I've been adding to it, so I'm adding more to that today. And I want to be in Kinder Morgan. These are both names that are going to grow. Kinder Morgan, as the economy continues to expand, jet fuel, gasoline, diesel is demanded and needs to flow from refineries to end users. That's a company that now is operating or projecting cash flows better than they were projecting going into 2020. So these are companies that are growing. They're going to do well. Their share prices are going to go up much more than Verizon. And you are correct, Scott. I am as bullish as I can ever remember myself being.
Wow. John Najarian, I'm wondering what you make of that, considering that you've been more cautious than most. I think it's fair to say on the desk. In the last, let's say, 4 weeks or so. I'm also looking at Bitcoin and the big reversal there and wondering how you're viewing that and what you think that says about overall sentiment about where the market's going next. You can address both of those for me. Are Kerry and Jim's bullishness misguided?
No, they're not. In fact, the data today, Scott, was extremely solid. I mean, you had new home sales surging. You had market PMI at record levels. You had European vaccinations getting back on track and moving to the north. You have UK retail sales. So, in other words, Great Britain doing much better on the retail sales numbers than was expected. PMI data at record levels also in Europe. So those are all the real huge positives, Scott. Obviously, the market reacted yesterday to the president's tax proposal, which is not a bill. It has not been signed into law, and we don't know whether or not it would be retroactive or not. So all those
we don't even know the details, right? We don't even know the details. The market reacted to we say a proposal, call it a report. Better call it a leak, because that's what it was. We don't even have any details. So the market seems to maybe have overreacted, at least initially, based on what you're watching today. But pardon me for interrupting you, John.
Yep.
But you're right.
Nope. You're exactly right, Judge. You're exactly right. Yeah, you're exactly right. Again, without knowing any of those things, the exactness of the change in capital gains tax, whether or not Joe Manchin would go along with it, because if he doesn't in the Senate, it's dead. So looking at all those different things, I thought it was an overreaction in the market yesterday. I think that there are some people who would maybe not cheerlead it, Scott, but would certainly be big beneficiaries of such a move. And they would be exchanges like the New York Stock Exchange, ICE, like the NASDAQ, like even Coinbase. And why would that be? Because if there's no incentive to hold stocks for the long term for the people that own close to 84%, as measured by some, that's the that top percentage ownership of the stock market by the exact group that would be taxed. If you have that going on, Scott, then I think they would certainly churn a lot more, trade a lot more, or at least trade some of the derivatives, which is great for me. It's great for the Chicago Board Option Exchange and the CME, and of course, all the brokers. So I'm not saying they'd be out in front waving flags and saying, let's go for this increase in capital gains tax. But I'm just looking ahead saying if something like this passed, Scott, you got to look through to who would benefit. And certainly all those entities that I named would benefit. Now, back to your question about Bitcoin. Yeah, there's a lot of long-term holders in this one that really got spooked when this report, as you say, not a statement from the president, but rather a report of what he's allegedly thinking about doing. When that got out there, yeah, Bitcoin broke through several levels, broke through that 52,000 stronghold, we thought, broke 50,000 and traded down into the 47,000 range. I bought on this dip. I am still a true believer that we go significantly higher in that cryptocurrency and a host of others. But I think prudent folks would know you don't go all in at any level. Instead, you just take little nibbles here and there. And I added to my holdings in digital assets on this significant pullback.